Hello, this is Rich Checkan from Asset Strategies International, and I'm pleased to welcome Nomi Prins of Prinsights Global. I've gotten to know Nomi over the past few years as a result of the Rule Symposium, Natural Resource Symposium, which is where we are again here in Boca Raton, discussing everything natural resources and macro and whatnot. And Nomi, welcome.
Thank you so much, Rich. It's a pleasure.
So I've come to love and respect your opinion on everything macro and natural resources. And I want to start out, because I know we've talked a little bit off air, what is the most exciting or interesting play in metals right now that you're seeing?
That's a great question. Obviously, everything that's happening in gold is interesting, and everything that's happening as silver is starting to catch up with gold for its industrial use value is interesting. And literally, just as we're speaking, I'm seeing copper at 550, which is breaking out of its band by a significant amount, which started yesterday when President Trump announced there could be a 50% tariff on copper. But what's interesting to me about that net of the price is that there has been, for the first time, investigation, something called Section 232 under the Trade Act, into whether copper should be considered a strategic mineral that's important or metal that's important for the defense of the United States. And I think this announcement from the White House, whether there is a 50% tariff or not, or whatever it winds out to be, is an indication of the importance of copper, not just as an energy metal, which it is for wiring, but also as a defense metal. So we've got gold,
Gotcha.
silver, and copper now moving up for different reasons. And I think collectively, that's really exciting.
Yeah, I mean, it's long been the bellwether of industry, and it is making a significant move. I knew it was on your mind. That's why when I asked that question, get it out there. But let's stay on the industrial side, and let's look at an industrial slash monetary metal and silver. What are your thoughts there? Because it continues to lag behind gold, but over the past year or so, it's starting to make its move.
Yeah, it is. And I think year to date, it's just kind of neck and neck with gold. And on some days, it's actually above gold. And what's interesting about silver, it doesn't have that same tier one capacity that gold has. Now,
Yeah.
central banks can't put it in their reserve and require that the other parts of their financial system or suggest that they have gold as well to tie into the central bank. Silver doesn't have that. It has a historical value, it has the inflation protection value,
Yeah.
it has the wealth appreciation value, but not that. But it also has this industrial use value. And what I think we're seeing now with this uptick in silver is that the idea that there could be an economic slowdown, which could tamper with that upside from an economic industrial perspective on silver, is kind of shaking out of the market. The market's kind of over it in a way. And what that means is even though economic growth, for example, in the United States, is down 0.5% in GDP for the last quarter. I mean, it's negative. Adjusted for inflation, it's very negative to
Yeah.
flat, right? But silver is starting not to care. And to me, what that means is that the industrial requirements for silver to build defense, to build infrastructure, to require those long-term strategic plans to be in place, and the idea that they will be fulfilled with real silver at the end of the day is starting to pull the value of silver up regardless of what's happening to the economy today. And I think that's going to continue to have a big impact on the price of silver. So I think we see, the 45, 50, 55 level in the next few months. And then I think after that, as investors start coming into this trend, we're going to see it moving a lot higher, a lot faster.
Do you think that might be one of the catalysts that draws retail investors into the marketplace, silver moving?
I think that's one of them. And one of the things that I have heard over the questions that I've gotten over the years about silver when retail investors think about getting into the market. They kind of understand gold. I think they should be more invested in gold than they are right now.
True.
But but can't you manipulate silver? I heard that JP Morgan is manipulating silver. I heard that ETFs are manipulating silver. And that always comes up as a question because that's
Yeah.
just something that's out there. And what this tells me and what it should show investors is that if the demand for silver is real and it's driven by strategic needs by major countries throughout the world, the more that pulls supply out of the ground into that demand, the less the question about what bankers are doing with
Great
supply underneath the futures contracts makes a difference. Nobody says that about gold. Nobody thinks anybody's manipulating the price of gold. Why? Because gold is so prevalent in so many places.
Yeah.
And now, of course, the central bank demand growing. But silver, with that extra demand, cannot be shifted in price. And the more retail understands that and the whole narrative goes away completely, I think the more retail's going to get involved.
That's a great observation. You just took me back to an interview I did for a Canadian talk show like 20 years ago, and they were asking me about silver price manipulation, and they said, well, what do you think? I was like, listen, I think every market's manipulated. I think the biggest manipulation is the Fed and interest rates. It affects everything. So yeah, I think it's manipulated, but here's the point. It's kind of like pressure building up in a pressure cooker. Eventually that lid goes off, and when it does, I really don't care what caused it. I just want to be holding some.
Exactly.
You know? So thank you for taking me back. Talk about the supply of silver. Obviously, the demand is growing. We see solar cells and all this, needing more ounces out of the ground. I'm going to get these stats messed up. You may know them better, but I want to say for like an 11-year period, silver was produced in a surplus. And then not this year, but I think the 2 previous years is all it took of deficit production to wipe out 11 years of surplus. And silver's in a good place now with the oncoming demand and where it stands with above ground supplies. Is that accurate?
No, that's really accurate. In fact, we just ran an analysis and sort of targeted in terms of a suggestion on a silver miner that's producing into that supply dearth. But our calculations are that there's actually a 200 million ounce deficit in silver above the ground to meet current demand. That's not even growing demand. And you can't just have a mine run and produce silver tomorrow.
Yeah, silver's inelastic. It's a byproduct in most cases, right? So you can't just get more because you want more. You need more of something else first.
Exactly, and just basic economics, you need it. There's a dearth of supply. It takes a while to actually find it and get it and supply it and bring it back out into the market. And what that does is it squeezes prices up.
Yep. Fantastic. So let's shift now to the other monetary metal, the world's only real money. What are your observations on gold at this point in this market?
Well, I think gold's only going to continue to go up. I mean, the impetus for buying physical gold is the fact that central banks, of course, are buying it into their reserves. China is now just above 5% of its reserves from under 2% just a few years ago.
It's a big move.
It's a huge move. And there's something 3,000 tons worth of gold that has been purchased in the last 3 years, about 1,000, a bit more per year, by the central bank community. Yep. There is zero geopolitical or monetary reason to not continue to do that. Because as these central banks continue to underpin their own nation's economies from a trade perspective and from a settlement perspective, from a payment perspective, having that, I call it a monetary anchor of gold, allows other central banks to basically participate with each other away from the US dollar. Not because they're trying to beat the dollar down, but because it's just strategic good sense.
Well, I think sanctions have pushed people away. I think just the way we've mismanaged our currency and the dysfunction in DC, I think that those are all reasons why people are looking for alternatives to the dollar. On that note, I hear all the time that the end of the dollar is near. I'm of the opinion that there's nothing out there that could possibly replace the dollar anytime soon. Where do you stand on that?
No, I agree with that. And it sounds so binary when that sort of question is thrown around. Is the dollar going to be here or go away? And it's not like that. The dollar is going to continue to be the world's reserve currency for our lifetimes.
I agree.
That's just the reality. But what's happening around that, not necessarily in currency, but in systems and payment systems, is that nations are developing their own digital platforms to be able to basically trade with each other in their own currencies and not have to convert to dollar each time. And in order to do that on a sort of objectively secure basis, the anchor of gold comes in very handy. It's not to say there'll be a gold standard, but the anchor of gold and the participation in a global payment system that isn't the current system, which is the SWIFT system, which is basically run by US and European banks, is actually where the world is moving. And so that requires an anchor of gold as well. The dollar will remain the reserve currency, but it will decline as a participation currency in global trade.
There'll be less demand for dollars if they don't have to settle in it. It seems, I don't know if it's it seems on like the global scale that this is kind of like the Euro experiment, where if everybody can trade amongst each other without the obstacles of currency exchange and things of this nature, that it might make the system a bit more efficient, a bit more cost effective.
Well, and also a bit more independent for all of the actors involved. If you don't have to continue to convert your currency into dollars in order to buy something in euros or to buy something in Brazilian reals or whatever it might be, then you actually have more freedom to negotiate your own trade agreements, which is, I think, where the world is going. I mean, the tariffs that have come out from the White House recently, or the uncertainty around them, have been an additional impetus for countries to want to do this. But this is a trend that's been happening.
Fantastic. Well, Nomi, thank you for taking the time to sit with me. I know you're incredibly busy here in demand at the conference, but I thank you for sharing your insights with me and with our readers. Thank you very much for being a friend, and thanks for being with us here today.
Thank you.